Hey everyone, how's it going? Today I'm going to be going over Bitcoin for the most part. I'm going to keep it as short and sweet as possible, get to cut to the chase, not waste anyone's time here. But really quickly, let's just go over what's been happening. Let's go over the high time frame first, going down to the lower time frame. Number one, what did Bitcoin really do over here in this candle, monthly candle? Well, number one, we have taken out these highs over here, which were made all the way back in like March, like almost a year ago, actually, exactly. And not only that, but we also managed to retrace back into this sort of fair value gap slash imbalance zone. You know, a lot of people, when they see something like this, when they see gap like this, they say to themselves, I would much rather wait for the imbalance fill, which comes in right where this top, well, the bottom of this wick is, which would then be labeled as a fair value gap. However, it is completely valid to mark out both, the bottom, the 0.5, and the top of the imbalance as well. All of them are valid resistance zones. And in this case, we seem to be rejecting right off of the entry area of this imbalance, like immediately rejection after taking out the liquidity. So that's where we are. We can keep this on the chart if you like. If you don't want to just keep that big green box, this is also fine. So we're kind of rejecting right now. And for people who, understand how to read like, basic candle patterns, it seems like we're approaching a case where we've gotten this massive rejection on the monthly time frame. And it looks like we're going to be closing this way as well, because we still got about a week until, this month is over. And to be honest, if we go up to the highs, before the month ends, that would be pretty crazy price action wise. So, but let's just talk. If we see a candle close like this on the monthly time frame, we should be prepared to see swing high form. What do I mean by swing high? Something like this, where we have this massive rejection, taking out the liquidity on the previous month's candle, and then a massive move down. So be prepared to see something like, this candle here and this candle here, where we open, move up, maybe 44K liquidity, and then move down again after to take out at least the low of this candle. That is the basic overview. So if it's not obvious enough, yes, that does mean that I have a bearish bias at the time being. How will that change? Well, I'll go over that on the lower time frame, because I like to identify, a base bias, by looking at just the monthly chart or the weekly chart, and then through the daily, scalps and day trades, I can kind of get a feel for if there's strength on the chart or not. So moving on to the lower time frame stuff, I'm just going to mark out a few things here. I'm going to mark out this fair value gap on the monthly time frame, which comes in at around 38,600, sorry. So we can just mark this out as a fair value gap over here. And then we can go down to the weekly chart, and we can see that this fair value gap comes within this imbalance area. So I'm just going to mark this whole section out like so. And this line here just represents the EQ, the equilibrium, the middle point of the imbalance, which could act as potential support. Now, much like our rejection here, where we didn't necessarily go all the way to the end of the fair value gap, it's possible that we get something similar here, where we just touch, take out 40K liquidity, touch the top of the imbalance, and simply, go up for a retrace. It doesn't have to retrace to the 0.5 or to the end of the fair value gap down here at 38,600. So keep that in mind. We understand we have a support level. Cool. That's nice. Now, I am looking at a few conditions for the support level, because depending on how we move down to it, I am going to be very skeptical. Because keep in mind, I do have my bearish bias. Let's go down to the daily, because there isn't really much else to dissect besides that. Now, usually when I see an impulse down, like so, I usually like to see, okay, did it leave any resistances? Because some people can look at this candle and be like, wow, this is just one big imbalance. We can just rock it up. Sure, but that doesn't mean there aren't potential resistances formed because of that. Now, number one, I'm seeing a lot of people talk about 45K. And I think that is a pretty fair area, because it comes up to near completion of the imbalance up here at 45,500. However, I think we should not ignore that there is a breaker here at 44K. Now, what is a breaker? Well, we have that in the module series over at Trading Floor. If you'd like to understand what a breaker, how to trade them, feel free to check out part of our order block series. However, anyways, moving on. I don't want to waste anyone's time here going over educational lessons. But we have our breaker, 44K liquidity, which we can also mark out here. Let's just mark it out quickly. Coordinates 44,000 like so. And you can also just mark it as a price if you want to be extra like that, like me. Price label, cool. We have that. We understand where it is. There you go. And just move it up. Cool. Resistance, support. We have those two marked out. Now, what else can we do? Well, we have, these main areas of support and resistance, and we can look at things in two ways. Number one, what if price does this, and then this, and then this? Okay, that's one scenario. And then scenario number two is, something like this, and then we head down lower. So usually my scenarios, when you guys see like a squiggly line on my chart where I kind of show that I have something like this and like this, it's always because I understand where my two main levels are. So I understand that I have this main level, I have this main level, and my squiggly lines are just based on what I think is the highest probability of first happening. Now, if I have a bearish, bias, then I would say to myself, well, it would make more sense to take out support and then resistance, because what does that mean? What happens if you take out support and then resistance? It means that there's no more support that's valid if we decide to come back down. However, if we go up to resistance first, like so, whoops, moving too fast here. If we go up to resistance first, well, there's still support. And this resistance is no longer valid the second time, which means, the bullish case is more likely of going up to the highs. So just to, give context, I guess, into how things on the high time frame translate to my lower time frame perspectives, I guess. The levels remain the same. It's just about how I believe, things will move. But the beauty of it is, even if I'm wrong, and even if we go up here first, that's fine, because, well, I'm not really like, taking any blind shorts over here. That's for sure. So mark these two down as areas to, be cautious of. Now, let's go down a little bit lower on the time frame just to see like how I would potentially, scalp this and look at it now. Before, we go up to this resistance, the question is, okay, well, what local support and resistances are over here? Because number one, what do we have? We have a weekend range. We have equal lows and, this kind of like choppy highs, poor highs over here, where we're expected to take out the liquidity at some point now. With that being said, let's start marking out levels. Let's go the classical route. Let's start with volume, fibs, and all that good stuff. Volume. We've got a lot of volume up here, 42,600. I can just mark that out, like so. Point control. Big white stick. And there you go, point control. Any fibs, which is a good question. Let's see. OTE. Coming within our OTE area over here. Now, you could just mark it out like this. You see, we have the point control, we have the first two OTE levels, which are typically the most important areas. And we have this up close candle acting as some sort of order block. So I can just mark out this instead as an order block, because I know it comes within these levels. And then you can just, start, taking this off and taking this off, because I don't really care for the precise to the dollar reactions. I just want to know a basic zone to enter, and then, have clear invalidations pointed out right after that. So I have my local resistance, which could help with the scenario of if we do something like this, essentially. What support levels are there? Well, it's kind of like just these two hourly candles that have just rocketed up. So I'm going to go down to the lower time frame and see. We have this down close candle here, which could act as support. So you can mark this out like so. You can mark it out wick to wick, body to body. It really doesn't matter. It depends on just how conservative and how precise you want to be. You can mark it out like this as an order block, or you can mark it out just the body. Both are respectable. But anyways, here's the level, and this is what we're waiting for as potential support. And I would say that if you're looking for any scalps or anything at all, it could potentially look something like this. Take out the lows over here into the order block. Say to yourself, 40,700. I'm just looking for it to be a decent risk reward. Let's say 42,300 to be safe. Just to take out this liquidity and front run the order block slash fibs. I hate when it does that. Okay. Cool. So that's our upper liquidity, like where you could expect stop losses to be, and you have this buy zone here. That's about it, locally speaking. Now, this idea is obviously valid if we get something like this, range, liquidity sweep on Monday or Tuesday, and then moving down for 40K liquidity. Where would I place my stop loss on this trade? That is going to be a bit tricky because two things. Number one, usually when I see an order block this close to a large pool of liquidity, I get skeptical because there's a lot of equal highs here. A lot of consolidation happened here. We could very easily go up to 43K and take out 43K and then reverse. So it's tricky. So unfortunately, the only, I guess, confident way to trade this is to potentially risk 2% to gain 6% on a trade, like so. Because if you put your stop loss here, well, we could go up and hit the point of control before rejecting. If you put your stop loss up here, well, we could go up, take out the liquidity, and then go down of these highs. So this is typically where I, get more relaxed because I see there's multiple options in the same area. And I would say this does get a bit risky. This is a bit of a risky trade. Saying this isn't as risky in my opinion because I do see a strong case for it to go up to these highs. I really do, and take out at least this Fibonacci area / order block. But this is a bit risky. Now, where does the risk kind of I guess minimize is at these levels here at 40K and 44K up here for liquidity. Now, if you want to trade this as best as you can, take the long, take an extremely risky short, and just because it's risky doesn't mean you have to sit out of it completely. It just means that maybe reconsider your position sizes on these trades. And then look for something like this, 40K, and then 44K, or up to 45K even, which is a potential. But just my idea right now is seeing how many people are looking at 45K would be pretty evil to front run them by $1,000 over here before going down pretty hard. So that's about all I'm looking at. I gotta say, guys, I really gotta say this. If we go up to 44K, I think this might be the lower high before we just completely crash down for the rest of the year. It's just, I'm seeing the monthly candle, how it's rejecting, and I think if we get another monthly candle open up, a lower high, and the next monthly candle we get a rejection to form a swing high, it's gonna be pretty brutal. I gotta say, it's gonna be pretty brutal. There's not a lot of support below us besides that 40K level area, so be cautious. If you are extremely bullish on your end and you think to yourselves, I want to keep going with the trend, that's cool, do your thing, but at least take some profits off. At least take some profits off the table. Be happy with what you have. We have had a massive run in 2023. Just be happy with what you got. This is a pretty crazy run. And if you think that you shouldn't be taking profits here because we're going to be going up to all-time highs, then that is where, it's more greed than rationale, I guess. So just at least do that. At least do that. Okay, I'm not telling you guys go all in short or close all your longs. I'm just saying be cautious. Okay. Now, what I want to go into next quickly, if we see a move down to 40K, and then we see some kind of like choppy range to 44K before moving down, typically what I've noticed is that last retrace sort of like area, like I know eliticians will look at this and be like it's either like an A, B, or C, or 1, 2, but typically within that wave 2 phase, alts tend to do pretty well before crashing down. Because they got to catch up. Bitcoin's hit its resistance. Altcoins are kind of lagging behind. Well, some altcoins are at least. And you're gonna guess it. What's one of them that I'm looking at? Zilliqa, or Zil, or whatever. Now, I think Zil doesn't. It's not gonna have like a crazy run. Like I'm not looking at these highs specifically, but I'm looking at a pretty decent run on Zil. Like at least 50%. So if you want to take advantage of that sort of consolidation period that these altcoins go through, or sorry, that Bitcoin goes through, and then leads to sort of a altcoin madness type of phase, then I'm looking at Zilliqa for the moment. I do see that on the monthly time frame, we've kind of taken out a ton of liquidity down here at these lows. I'm gonna have to go to log, aren't I? Down here, we've taken out a bunch of lows. We made a swing low and then reversed up. Now we're simply retracing. And I think this retrace here is gonna be a pretty decent opportunity before coming up a little bit more. And where am I looking at for resistance? I'm looking at this up close candle here. That's it. If you want a potential trade, this is it. Now, where am I looking to enter, or where would be a decent entry point? To be honest, I think we've pretty much formed an order block here on the daily, and it would be pretty nice to see some kind of move up after hitting this daily order block. We could see another move down. If Bitcoin decides to go down to 40K for that retrace, we could see another move down to take out these lows and then move up. But I think it's going to be fair to look at it like this. And I'm going to be looking at 0.4 or 0.04 for like a solid 80%. And of course, your stop loss is going to be depending on what kind of trader you are. Are you looking at spot, 1x, 2x leverage, 50x, or I don't know if they do 50x leverage for this. But your stop loss is going to depend. But of course, the safest bet is typically just at the low of where the swing point was. And so far in the weekly, if we get a massive move up today or tomorrow, that weekly low is going to look pretty nice. So that's all I'm really looking at the moment. Zilliqa. Of course, if you guys haven't already, on the channel, publicly available as well, Longit for Bongit has actually made a pretty, nice video about Shiba Inu and about what he sees an opportunity in that. So if you guys want to see some other altcoin opportunities, he does a pretty good job just diving deep into that and giving you guys good reasons as why he thinks Shiba is potentially a good opportunity. I do think there's a time to take advantage of potential moves, and that time is growing nearer. So yeah, anyways, I hope you guys enjoyed this. I wanted it to be a short and sweet stream, but I just had a lot to say. So yeah, anyways, take care guys, and enjoy the rest of your weekend. Ciao.